In Toronto today, it takes the average young buyer 27 years just to save for a down payment on a modest home. Take a look at this chart. Average time to save for a down payment. Toronto, 1976 versus 2025. And here's the kicker. Even if prices drop another 20%, most first-time buyers still can't get in. But what if I told you this widening gap is fueling one of the most profitable rental markets in North America? I was chatting with a senior real estate strategist here in Toronto just last week, and he summed it up perfectly. This is no longer a first-time buyer's market. It's an investor's playground. So here's the question. Is this your once-in-a-decade opportunity to capture high-yield assets in Toronto? Or are we looking at a ticking time bomb? Stick around. In this video, I'll show you exactly where the smart money is going, what the latest data reveals, and how you can take advantage before everyone else does. And check this out. Rental yields in Toronto, 2024 to 2025. The harsh reality of Toronto's housing market. Let's take a moment to zoom in on what's happening on the ground in Toronto right now. For years, this city was considered one of the hottest property markets in North America. High demand, limited supply, and a steady flow of new immigrants kept prices climbing year after year. But as of 2025, the landscape has shifted, and not necessarily in the way most expected. Home prices in Toronto have come down slightly from their pandemic peaks, but they're still out of reach for most buyers. The average price for a detached home is hovering around 1.2 million CAD, and even condos average nearly 720,000 CAD. That's a huge stretch for first-time buyers, especially when wages haven't kept pace. Take a look at this chart. Average home prices in Toronto by property type, 2020 versus 2025. I was speaking with Alex Chen, a real estate advisor who's been active in both the Toronto and Vancouver markets for over 15 years. Here's how he put it. We're seeing a market that's correcting, but not crashing. Prices are sticky because demand is still strong in certain pockets, especially from investors and foreign buyers who view Toronto as a long-term bet. And he's right. Toronto still benefits from high immigration rates, over 500,000 newcomers expected in 2025, many of whom need places to live immediately. The problem is they're not buying homes, they're renting. And that's where things get interesting for investors. The rental surge and why investors are taking over Toronto's rental market is booming. In 2024, the average rent for a one-bedroom apartment hit $2,501 CAD, with two-bedroom units going for over $3,200 CAD. That's a 13% increase from just a year earlier, and the trend shows no sign of slowing down. And check this out. Average monthly rent for one-bedroom and two-bedroom units. Toronto, 2023 versus 2025. Young people are priced out of buying, but they still need a place to live. For investors, this creates a perfect storm. High demand, low vacancy rates, and the ability to command premium rents. I recently reviewed a case study of an investor who bought a mid-range condo in the downtown core back in 2019 for $650,000 CAD. Fast forward to 2025, and while the property's market value has only increased to around $720,000 CAD, his rental income has jumped significantly. He's now clearing $3,000 CAD a month in rent, generating a net yield of over 6% after expenses. Not bad in today's climate. How Toronto compares to other global cities. Now, let's take a step back and compare Toronto's situation to what we're seeing in cities like New York, Miami, London, and Sydney. These are all markets with similar challenges. Affordability crises, high demand for rentals, and a growing reliance on investor capital. In New York, for example, median home prices in Manhattan are north of $1.1 million USD, and rents for one-bedroom apartments average $4,000 USDs a month. Yet investors are still active because they understand one key truth. Cities with constrained supply and high demand always bounce back. Take a look at this chart, comparative rental yields. Toronto, New York, London, Sydney, 2024. Toronto's rental yields, currently sitting between 4.5% and 6%, depending on the property type, are outpacing London and Sydney in many segments. That's why investors from Australia and the UK are increasingly looking at Toronto as a way to diversify their real estate holdings. Expert insight. What the data is really telling you. I had an in-depth conversation with Priya Nair, an economist specializing in urban housing trends. Her take was eye-opening. The biggest mistake investors make is assuming Toronto will follow the same boom and bust cycle we've seen elsewhere. What they're missing is the chronic underbuilding of homes relative to population growth. That's why prices aren't collapsing and why rental demand is skyrocketing. She pointed me to the latest CMHC data showing Toronto needs at least 650,000 new housing units by 2030 to restore any semblance of affordability. That's an enormous shortfall, and the pace of new construction isn't anywhere close to meeting that demand. Take a look at this chart. Housing supply gap. Toronto, required versus actual builds, 2024 to 2030. Stories from the front line, winners and losers. Let me share the story of Michael and Sarah, a young couple who decided to stop chasing the home ownership dream in Toronto. Instead, they pivoted. With $200,000 CAD saved up, originally intended for a down payment, they partnered with two friends and purchased a triplex in Hamilton, about an hour outside Toronto. They converted it into a co-living space, offering premium short-term rentals. Today, their investment is generating over $9,000 CAD a month in gross rent, with solid cash flow after expenses. Michael told me bluntly, "If we had waited to buy our own home, we'd still be renting in the city and feeling stuck. This way, we're building equity and cash flow." On the flip side, I spoke with an investor who over-leveraged in pre-construction condos in downtown Toronto back in 2021. With rising interest rates and cooling demand in the resale market, he's now sitting on negative cash flow properties. It's a stark reminder, strategy and timing are everything. What smart investors are doing right now? So what's the play here for investors in 2025? The smart money is focusing on rental properties in areas with tight vacancy rates and strong population growth. They're also looking at multi-unit residential buildings, which offer better economies of scale and higher yields. Many are diversifying by exploring secondary markets outside Toronto, places like Hamilton, Kitchener-Waterloo, and even parts of Eastern Ontario. These regions offer more affordable entry points while still benefiting from Toronto's spillover demand. Take a look at this chart, vacancy rates by region, Greater Toronto Area 2024. But perhaps the most important trend is this. Savvy investors are staying liquid and flexible. They're securing financing at fixed rates where possible, keeping LTV, loan-to-value ratios conservative, and prioritizing cash flow over speculative appreciation. Final thought from a veteran investor. I'll leave you with this thought from Mark Reynolds, a property investor who's been in Toronto real estate since the late 90s. Every time people think the Toronto market is done, it proves them wrong. The fundamentals are still there. Immigration, limited supply, global interest. But if you're not disciplined, this market can eat you alive. What it all means for investors like you, let's take a step back for a second. We've covered a lot of ground, so here are the big takeaways you need to walk away with. First, Toronto's affordability crisis isn't going away anytime soon. With sky-high home prices and wages that just can't keep up, we're looking at a market where renters are here to stay. Second, this sustained demand for rental housing is turning Toronto into one of the most attractive rental markets in North America, with yields that are outpacing traditional heavyweights like London and Sydney. And check this out, projected rental yield growth, Toronto versus global cities, 2025 to 2030. Third, savvy investors are shifting their focus. It's not about flipping anymore. It's about long-term cash flow, multi-unit properties, and diversified portfolios that include up-and-coming regions beyond the downtown core. And fourth, this isn't the time to get reckless. The investors winning in 2025 are the ones who are strategic, disciplined, and focused on fundamentals, not hype. What you should do next. Now, here's the part where decisions get made. If you're watching this and thinking, maybe I've already missed the boat, I'll tell you right now, you haven't. But waiting around could cost you. I'm seeing investors lock in high-yield rental properties and strategic multifamily units right now while competition is still reasonable. 6 months from now? That window might be a lot tighter. So what's your move? Do you think Toronto still has the fundamentals to deliver long-term returns? Or is this a market you'd rather stay clear of? I want to hear your take. Drop a comment below and let's get a conversation going. What markets are you watching right now? Are you seeing similar trends in cities like New York, London, or Sydney? And if you got value from this video, do me a favor. Hit that like button so we can reach more smart investors like you. And don't forget to subscribe to EstateScope and turn on notifications. We've got deep dives on Vancouver, London, and Sydney coming up next. And trust me, you don't want to miss those. Because in real estate, timing is everything. And being late to the right information? That's something none of us can afford.